Accounting Enrichment Society, also known as ACES, is an interest organization of De La Salle University das Marinas under its accountancy departments. ACES, which is operated by BSA and BSM students, is here to assist their fellow students from the same accountancy and management accounting programs with their studies, mainly their accounting-related lessons. The students are given enrichment classes they could attend to, and extra lectures, tutorial sessions, and learning materials which may all help them understand accounting concepts easily. This academic year, ACES is stepping it up by creating YouTube tutorial videos about accounting concepts. Fun, interactive, enlightening, and broadening. ACES YouTube videos are surely not just another extra lecture and tutorial session, but also a fun and interactive way of learning.
Hello, and welcome back to another tutorial video session by AcES. This video is prepared by Bryan Andres, Mijares, and Miguel Gonzales. This video is included in our second batch of videos with the following topics: inventories merchandising, inventories manufacturing, and VAT transactions. This video, we will be tackling VAT transactions. So make sure to check out our previous videos if there are lessons that you have missed.
Before we proceed to the main part of the topic, let's first have an overview about manufacturing business. We must remember that in a manufacturing type of business, it involves buying of raw materials and processing them into finished goods by using labor or machines that are being sold to customers. So for you to have a better understanding of manufacturing business, a great example would be the gardenia factory, wherein it buys raw materials such as flour, eggs, etc., and processes them into their finished goods, which is the bread, by using labor and machinery.
For today's video, we will discuss the terms and concepts of value-added tax transactions, as well as journalizing, computing, and some practice exercises for further illustrations.
So here are the other terms which you will encounter in this topic. So better to take note of these terms. So first, VAT. VAT is a tax levied to certain providers of goods and services, which means that in every sale, barter, exchange, or lease of goods or properties and services, there is a tax consumption on it. Input tax. When there is an input tax, each time a purchase is made, VAT is included, which means the buyer pays the cost of merchandise and the tax. Output tax. And when there is an output tax, each time there is a sale of goods and services made by a VAT-registered business, 12% VAT is charged to the customer. So we will explain more about these terms later in the next clip. So stay tuned.
Value-added tax is a type of sales tax collected from the buyers to raise revenues for the government. It is the tax collected from the sale, barter, exchange, or lease of goods, services, or properties. Since this tax is transferable from seller to buyer, it is classified into indirect tax. Now, you might be wondering, who or what entities are subject to value-added tax? The answer is, the companies who earn more than 3 million pesos in their annual gross revenue are required to file for VAT returns. VAT is essentially an ad valorem tax, which means that its amount depends on the value of the taxable item. It is measured through a fixed rate of 12% for the sale of goods, properties, and services, as well as imported goods. However, export sales and others, such as zero-rated sales, are charged at 0%. Now, tax can be classified as input or output VAT. Output VAT is the VAT that is charged to customers. It is included when the company makes a sale on taxable goods or services. This is observed when a company makes a sale and the 12% VAT is then included in the bill of the customer. Try looking at a receipt from a grocery store, for example. The VAT computed, shown towards the end of the receipt, is an example of output VAT. Input VAT, on the other hand, is tax charged to the company through the purchases they made. The input VAT is included in the amount the company pays for its purchases. For example, a company bought supplies for the production of their product. The amount the company pays is then equal to the cost of the supplies as well as the 12% input VAT. To illustrate, let us look at this diagram. As you can see, when a company purchases from its supplier, it receives goods or services, but it also pays the input VAT to its supplier. While on the other side of the diagram, the company makes a sale through a client. They then provide the goods and services, but also receive an output VAT when the client pays. To know how to journalize VAT transactions, let us observe these tables. Input VAT, which is normally debited, is journalized when there are purchases made by the company as well as freight. It is then credited when the company makes returns and discounts on their purchases. Output VAT, a credit account, is then journalized when there is a sale. However, it would be debited if a customer ever returns their product or is discounted. These are how the journal entries should appear. So, to summarize, a purchase is debited with input tax, while a sale is credited along with output tax. Now on to the computations. To get the amount of VAT, the invoice price or gross selling price is multiplied to 12%. Then, to get the amount with VAT, it is the invoice price plus the amount of VAT computed. And lastly, to get the amount without the VAT, it is simply the invoice price. If ever the invoice price is not provided, it can be computed through the VAT inclusive amount divided by 1.12. VAT due and payable is computed by subtracting output tax from input tax. As stated earlier, companies that pass the 3 million pesos income threshold are subject to the filing of VAT. However, if a company does not reach this threshold, they are to pay 3% percentage tax quarterly. Input and output tax is also not applicable to these companies.
To test our knowledge, we have provided a problem. Summer Company is a wholesaler of car seat covers. At the beginning of the current year, the entity's inventory consisted of 90 car seat covers priced at 1,000 pesos each. We are required to prepare journal entries assuming that the company is VAT registered. During the current year, the following events occurred. 1. The company purchased 800 car seat covers on account at 1,000 pesos each. So let's consider that the amounts are VAT exclusive. Since this is a purchase transaction, we recognize purchases and accounts payable. For the amount of purchases, we multiply 800 car seat covers to 1,000 pesos, which gives us an amount of 800,000 pesos. Since this is a VAT registered entity, we recognize input tax. To compute for this, we simply multiply the purchases amount by 12%. This means we multiply 800,000 pesos by 12%. Thus, we get an amount of 96,000. For accounts payable, we simply add the value computed for purchases and input tax. Thus, we have 896,000 pesos. Now, let's consider that the amounts are VAT inclusive. Again, since this is a purchase transaction, we recognize purchases and accounts payable. However, instead of starting in purchases, let us start computing for the total amount, which is accounts payable. For the amount of accounts payable, we multiply 800 car seat covers to 1,000 pesos, which gives us an amount of 800,000 pesos. Remember that this amount already includes VAT, thus we divide it to 1.12 or 112%, giving us 714,285 pesos and 71 cents. This amount will be our purchases. Finally, for input tax, we simply multiply 12% to our purchases. This means we multiply 714,285 pesos and 71 cents by 12%. Thus, we get an amount of 85,714 pesos and 29 cents. So that is all for our first transaction. For the second transaction, it says that the company returned 50 defective car seat covers to the supplier and received credit. The phrase received credit here means that the supplier simply deducted our returns to our liability to them, or simply the accounts payable. Since this is a purchase returns transaction, we recognize purchase returns and a decrease in our input tax and accounts payable. For the amount of purchase returns, we multiply 50 car seat covers to the amount it cost us, which is 1,000 pesos. This gives us an amount of 50,000 pesos. Since the transaction is a purchase return, we also have to consider the VAT connected to the purchases returned. To compute input tax, we simply multiply the purchase returns amount by 12%. This means we multiply 50,000 pesos by 12%. Thus, we get an amount of 6,000 pesos. For accounts payable, we simply add the value computed for the purchase returns and input tax. Thus, we have 56,000 pesos. Now, let's consider that the amounts are VAT inclusive. Again, since this is a purchase returns transaction, we recognize purchase returns and a decrease in our input tax and accounts payable. However, instead of starting in purchase returns, let us start computing for the total amount, which is accounts payable. For the amount of accounts payable, we multiply 50 car seat covers to 1,000 pesos, which gives us an amount of 50,000 pesos. Remember that this amount already includes VAT, thus we divide it to 1.12 or 112%, giving us 44,642 pesos and 86 cents. This amount will be our purchase returns. Finally, for input tax, we simply multiply 12% to our purchase returns. This means we multiply 44,642 pesos and 86 cents by 12%. Thus, we get an amount of 5,357 pesos and 14 cents. That is all for the second transaction. For the last transaction, the company sold 250 car seat covers on account at 1,200 pesos each. Let's consider that the amounts are VAT exclusive. Since this is a sales transaction, we recognize sales and accounts receivable. For the amount of sales, we multiply 250 car seat covers to 1,200 pesos, which gives us an amount of 300,000 pesos. Since this is a VAT registered entity, we recognize output tax. To compute for this, we simply multiply the sales amount by 12%. This means we multiply 300,000 pesos by 12%. Thus, we get an amount of 36,000 pesos. For accounts receivable, we simply add the value computed for sales and output tax. Thus, we have 336,000 pesos. Now, let's consider that the amounts are VAT inclusive. Again, since this is a sales transaction, we recognize sales and accounts receivable. However, instead of starting in sales, let us start computing for the total amount, which is accounts receivable. For the amount of accounts receivable, we multiply 250 car seat covers to 1,200 pesos, which gives us an amount of 300,000 pesos. Remember that this amount already includes VAT. Thus, we divide it to 1.12 or 112 giving us 267,857 pesos and 14 cents. This amount will be our sales. Finally, for output tax, we simply multiply 12% to our sales. This means we multiply 267,857 pesos and 14 cents by 12%. Thus, we get an amount of 32,142 pesos and 86 cents. So what are the upcoming lessons that you guys could watch out for? For the next batch of tutorial videos, we will be having adjusting entries, bank reconciliation, and accounting for payroll. So keep in touch with us.
Kamusta mga ka-ACES? Nag-enjoy ba kayo? May natutunan ba kayo? Comment down below your experience in studying with us. Pwede rin kayong mag-comment na mga tanong na amin na mga God sasagutin. Muli, kami ang Accounting Enrichment Society. Please don't forget to click the subscribe button and hit the notification bell below para updated kayo sa mga next videos na aming ilo-launch. You can also like our Facebook page and follow us on our Instagram for more updates.